Imagine this. You're 29 years old, sitting at your kitchen table on a Sunday morning. Coffee in hand, you open your 401k app. The balance looks fine, but then you scroll through the headlines. BRICS expands, challenging U.S. dollar dominance. You pause. BRICS? Isn't that just some acronym from econ class? Here's the thought that hits you. What if global power shifts could ripple into your retirement account? That's exactly what we're diving into today. How BRICS, a growing alliance of countries, could impact your investments as a young American. BRICS stands for Brazil, Russia, India, China, and South Africa. But here's where it gets interesting. In 2024 and 2025, BRICS expanded to include Egypt, Ethiopia, Iran, the UAE, Saudi Arabia, and Indonesia. Together, BRICS Plus now represents nearly half of the world's population. It accounts for about 37 to 41% of global GDP, measured in purchasing power parity. And with Saudi Arabia, Iran, and Russia inside, BRICS countries control a huge share of global oil production. Estimates put it at over 40% of the world's supply. So this isn't just a club, it's a heavyweight coalition shaping trade, energy, and finance. Here's the key. Most global trade today happens in US dollars. That's why the dollar is called the world's reserve currency. But BRICS nations are openly exploring trading in their own currencies or even creating alternatives. This process is called de-dollarization. If fewer countries use the dollar, demand for U.S. bonds could shrink. Less demand means potentially higher interest rates at home. And higher rates ripple into everything: mortgages, car loans, even credit card APRs. Think of it like this. If the dollar is the world's VIP pass, BRICS is trying to print its own. Now, let's connect this to your portfolio. The S&P 500 has historically returned about 10% annually over the long run. Emerging market ETFs, like those tracking BRICS countries, have been more volatile, averaging closer to 4 to 6% annually over the past 2 decades. If U.S. dominance weakens, American companies could face slower growth. But if BRICS economies rise, emerging market ETFs might capture more upside. This is where diversification matters. Instead of betting only on U.S. stocks, adding a slice of international exposure could balance risk. Here's where it gets personal. If BRICS reduces demand for U.S. treasuries, the government may need to offer higher yields to attract buyers. That pushes up interest rates across the board. For you, as a 25 to 35-year-old, maybe eyeing your first home, a 30-year mortgage at 3% means a $300,000 loan costs about $1,265 a month. At 6%, that same loan jumps to $1,800. Global shifts can literally change whether you can afford a starter home. Meet Banana, 32. Banana is invested only in U.S. stocks through a 401k. Scenario A, U.S. remains dominant. Banana's portfolio grows steadily, averaging 8 to 10% returns. Housing stays manageable, inflation stable. Scenario B, global shift happens. U.S. stocks slow down, averaging 5 to 6%. Emerging markets rise, but Banana has no exposure. Mortgage rates climb, making Banana's dream home harder to buy. The difference? Banana's portfolio could be tens of thousands of dollars smaller by retirement, simply because Banana didn't diversify. Let's ground this in real numbers. S&P 500 historical average return, 10% annually. Emerging markets, MSCI EM index, 4 to 6% annually, with higher volatility. U.S. debt over $34 trillion as of 2026. Dollar share of global reserves down from 70% in 2000 now to about 58% today. These aren't doomsday stats, they're signals that the financial landscape is shifting. So here's the bottom line. Don't panic. Global power shifts happen slowly. Focus on diversification, U.S. stocks, international ETFs, maybe a touch of commodities or crypto. Think long-term. Your retirement horizon is decades away. Manage risk, but don't let headlines scare you out of investing. Global power shifts don't happen overnight, but smart investors prepare early. So ask yourself, is my portfolio ready for a world where BRICS matters? If you found this helpful, hit like, subscribe for more smart investing breakdowns, and drop a comment. Do you think BRICS will reshape the global economy?